Welcome to the Great Divorce Podcast, hosted by divorce financial analyst and retirement planning counselor Andrew Hatherley. Join Andrew and guest experts as they help late-life divorcees build the financial and mental foundation for a meaningful future. There is life after divorce. Now, on to the show.
Hello, everyone. Welcome to the Great Divorce Podcast. Are you going through a divorce and you're wondering if your soon-to-be ex is stashing some cash out of your sight? Or are you worried that your spouse is undervaluing a business that's half yours? Well, my guest today can help. Laurie Dyke is a certified public accountant, certified in financial forensics, and a certified fraud examiner with 30-plus years experience as a financial investigator. Laurie is the founding partner of IAG Forensics in Atlanta, where she manages the firm's family law practice, in addition to being a consulting and expert witness in business litigation and fraud investigation cases. Laurie, welcome to the Great Divorce Podcast.
Thank you for having me, Andrew. I'm excited to be here.
Well, we're excited to have you. It's a fascinating subject, and it's something that my divorcing clients often bring up, the issue of their soon-to-be exes stashing some cash. But first, I'd like to start with the term forensics. You know, I read about financial forensics and forensic accounting all the time. Of course, in the media, we see, forensics associated with CSI. What does the term forensics mean in the context of what you do?
An easy way to describe it, and you just mentioned the term, is financial forensics is CSI with numbers. Forensics, by definition, is in support of the legal system. So we're doing financial analysis for pre-litigation and litigation matters.
Okay, great. So people trying to hide assets in divorce. What do you see is some of the main ways people try to hide assets from their spouses in divorce?
Well, there are really only two main methods that people use. They either skim money off the top, which means revenue should be coming into the marital estate, but it's diverted somewhere before it gets there, or it makes it into the marital estate and then it's removed somehow out of a bank account or a savings account or borrowed on a piece of real estate. So either money in is diverted or money's taken out of the marital estate without the spouse knowing about it.
Okay. Well, let's look at the first method there, skimming it off the top. This could be a person who's a W-2 employee, but it could also be a business owner. So let's look at people first. Let's assume it's a husband and wife, and one of them is trying to hide income. They don't own a business. What are some common methods you might see that one of those persons might use to hide assets?
With a W-2 employee, it's much easier, much less opportunity to hide money, but there are some ways. We've had cases where most of a paycheck was deposited into a marital account, but part of the paycheck went into an account the spouse didn't know about. We've seen cases where employees conspire basically with their employer to defer income and not report it on their taxes. Usually that happens with a smaller employer, not a really big company. And we've also seen cases where an employee is entitled to receive reimbursement of expense monies that they paid out on their personal credit cards, and the expense funds are deposited into an account that the spouse doesn't know about.
You mentioned payments from an employer. Another payment might be a bonus that's upcoming, let's say, in 6 months. And might this be a potential red flag to, well, what are your thoughts on, let's say somebody knows that they're going to get a $200,000 bonus is coming down the line in 6 months' time. They might see some incentive to get the divorce, if they're being nefarious about it, to get the divorce done with as quickly as possible, no?
Absolutely. We've seen that many times. Now, just because somebody is kind of rushing through the divorce doesn't mean they're hiding assets or trying not to share with the other spouse. There may be legitimate reasons to try and get it done quickly so as to not pay a lot of legal and accounting fees. But it's always something to look at. It's a bit of a red flag if an opposing party feels like they're rushing things through.
You know, something I've also seen is moving money or lending money, and this once again in the W-2 employee. Let's keep businesses out of it for a second, but giving or lending money to family members over time. Let's say they've got an idea that a divorce is going to be coming down the pipeline, or that they're thinking about it 2 or 3 years ahead, and they divert funds to, let's say, elderly parents or friends, perhaps ostensibly as gifts or loans, but not in the expectation that they ever be paid back. But really, they expect them to be paid back after the divorce.
Yes, that happens. And that's really the second part of how somebody would try to hide assets. So we talked about money being skimmed off the top. That's a way to get money out of accounts.
Right.
That once it's in there. Plenty of cases of people send money overseas to family and friends, may carry it in cash on an airplane, loan money to paramours, girlfriends, or boyfriends. We've seen cases where people actually have helped friend, quote unquote, buy real estate in that person's name, help with the down payment, may not be on the title or the mortgage, but have invested funds. So absolutely, that's one way to do it. And there's no tax reporting when you're doing that sort of thing. So unless you're following the money carefully, you may miss it going out.
You're right. So let's stick with that, the idea of skimming off the top, getting the money out of the picture early in the game from the business standpoint. Now I can see some people doing this for nefarious reasons to underreport their income on taxes, but I could, for the IRS purposes, but I could also see it as a way to keep it separate from their spouse as well, but also potentially to artificially undervalue the business in a divorce proceedings, which may be down the road as well. What are some ways that, and I suppose it depends on the nature of the business, that some of this revenue could be skimmed off the top for any of these nefarious purposes?
Well, in many businesses, once funds are deposited in the bank, they're recorded in an accounting system, QuickBooks or something like that. But depending on the type of business, we always want to go behind looking at the operational systems. For a doctor or dentist, we've got to look at their billing system. How much are they getting paid by patients or insurance companies? If it's a restaurant or bar, they're going to have a point of sale system, which reports the sales and how much it's collected. In every business, the owner has to keep track of money that it gets from its customers. And so we try and figure out what source of information that is. It may be on a whiteboard. We actually had a case where a landscape contractor, kept track of how much his customers owed him on a whiteboard. And so we got that information. But if you're a customer of a company, you will at some point want documentation to know how much you paid. So we always want to go behind and figure out what the owner's doing to keep track of the funds that are coming in from their customers and then get those documents.
It seems to me that may be a little trickier than the second way people try to hide assets that we just touched on, which was essentially shifting funds from existing accounts to accounts that aren't reported. Would you agree that first way is a little trickier?
Yeah, much harder because you've got to try and identify the source of the income and prove a negative in some respects. So yeah, it's much harder. Once funds hit an account, as long as you've got a continuous record of the accounts, you can see where it's leaving. But if it never shows up in the first place, it is definitely trickier.
Yeah, as a matter of fact, I had a case recently where I was the financial consultant to the attorney and his client, the wife, and she was not particularly involved in the financial affairs, but I requested 3 years worth of checking accounts and went through them in a fairly detailed manner, going through every cash transfer out. And sure enough, found 3 accounts that weren't listed on either the husband or the wife's financial disclosure form. So in that case, it was just a matter of it was easy for me to find. It was what's the word? It's simple, but it's not easy. I mean, it's late. It's time consuming. It's laborious. It's not fun,
Right.
but it's simple. It's just going through, and which brings me to kind of the next question for you is the strategies that you use to discover these hidden assets. And I just mentioned going over forms. I know a lot of clients often come to me and they think there's this magical hidden internet chamber with all the answers or a special a special detective who can find all these things. I mean, when people come to you and ask to hide hidden assets and have these expectations, I mean, how do you kind of bring people down to earth as to how you do the work you do?
That actually happened to me just this week. A client, prospective client called and said, when we got married, my wife had money in a 401k. That's 30 some years ago. I want to know what happened to that money and if it still exists. And I said, good news is that I can't just go out into the big Google world and find financial accounts that belong to other people. Personally, I'm happy about that. I don't want somebody to go, oh, where does Laurie Dyke do her banking and how much money does she have in the account? And so, as you say, it's a lot more laborious. It's not rocket science. We start with what we know, and then we trace it through. We unravel a ball of yarn. We look at bank statements, we look at credit cards, we look at tax returns, where the interest and dividends coming from. If somebody's applied for a loan, we get their personal financial statements and see what they've disclosed there. Look at transfers. We do a lot of spending analysis of checking accounts. We do it pretty efficiently because we've got a software package. So we see where the money's going. Sometimes we research real estate records, which are publicly available information, and each state has its own database. But I found a house one time that somebody had purchased that his wife didn't know about, paid the down payment from his business, we're making the mortgage payments through the business. She had absolutely no idea, but we found it just by searching real estate records. So it's a lot of legwork, it's a lot of detail, it's a lot of diligence, and it's following the trail.
You know, you mentioned tax returns, and yes, they can be a treasure trove of information. And I had a case where my client didn't think she had a retirement plan. And I don't think it was nefariously hiding anything on her part. I think her husband was the one who kind of was the Lord overseer of the finances, but had created a SEP IRA for her. It was there on the tax return. And so it's interesting when you compare the financial disclosure forms that the attorneys get the clients to draw up with the information such as the tax return, the bank statements. Sometimes you can find things that were perhaps neglected, quote unquote, accidentally or definitely nefariously. But it's not always with ill intent, and certainly, this is the Gray Divorce podcast, and we're dealing with people who may have been married for decades, and frankly, maybe in their 70s or even 80s. And I'm wondering, are you seeing anything with respect to these older people getting divorced and hiding assets, or maybe not hiding them at all. Just with time, so many things have gone on in their lives. Maybe they're just not aware of them.
Yes, that is a particular issue when we're dealing with older people. They may have more assets, certainly do, than when they were younger, and sometimes they just simply lose track of them. Like you, I found an IRA that my client didn't know about one time. It had been rolled over from a 401k many years before, hadn't touched it, probably got statements and didn't realize it, but I had him go on to the IRS website, create his ID Me identity, and get me transcripts of his IRS accounts. What a lot of people don't know is that administrators of IRAs file forms 5498 with the IRS that tells what the assets are in an IRA account every year. So it doesn't show up on a current tax return, but it is reported to the IRS, and everybody can get it for their own accounts by just logging on to the IRS website. And as you say, it's not always intentional. It's not nefarious. It's just kind of what happens when life goes on.
No, definitely. We were talking about strategies for discovering hidden assets, and people think that there's the magical place on the internet, or that needs to be hacked into. And of course, hacking is something you'd never do to try and uncover. You don't need a loss. You don't need legal problems in your divorce. But I'm curious about private investigators, because I've heard a couple of people have come to me and said they're thinking of hiring a private investigator. And you know, I I did a little bit of research on the use of private investigators in divorce, and I'm curious on your thoughts. In the case that I'm thinking of, um, I'm not sure if it was a gray divorce case, but the couple had a business, and obviously in divorce, the higher the value of the business, uh, the more spouses tend to gain in the division of property. And if one spouse is going to continue operating the business and wants to keep the business, well, there's an incentive for them to try to undervalue the business, or perhaps hide income earned from the business. And in one particular case, I heard of a private investigator pretending to be interested in buying a business from a man, and going through divorce, and the value that the private investigator came up with the business was pretty low, but it was based on tax returns, and the man selling the business, perhaps unwisely, divulged to the PI, "Oh no, the business is worth a lot more than that. Here are receipts. Here are cash receipts right here." It's a cute anecdote, but I mean, I suppose it's a good testimonial for using private investigators. I don't know how often that sort of thing happens, but anyway, what are your thoughts about the potential use, or is there a place for investigators? And also, I've seen asset tracing firms as well. How do these people compare to, say, the work that you do?
Well, I like working with private investigators in certain situations. The way I see them used mostly in divorce is surveillance, when somebody's trying to catch somebody cheating on their spouse, or having illicit sex in dungeon basements or things like that. When it comes to financial tracing, sometimes PIs have access to national databases that they can access easier than I can if we're looking in multiple states, and they can do some tracing. So there are times when I like working with PIs for that purpose. I don't ever recommend using a firm that promotes itself as a quote unquote asset search firm. We can help you find bank accounts and financial accounts. There are a lot of legal restrictions on what financial institutions can disclose, and legal or illegal ways to try and obtain that data. So I never recommend that. I have had a few parties, clients, who insisted on doing that and have spent a lot of money, but not one time has an undisclosed asset ever been found, but they've spent money following a rabbit down a rabbit hole without any payoff. So I don't recommend it.
Yeah. We talked about in businesses and wanting to undervalue the business. There are legitimate business expenses, your phone or perhaps your car. But then we enter gray areas where, we look at perhaps meals and trips or car expenses. What are some common areas you see business owners, and let's say it could be the wife operator. Let's say the wife's the principal operator of the business and the husband, may have a small role in the business, but doesn't play a key role. What are some areas you see expenses being used, perhaps not legitimately, to underreport the income of the business?
Well, as you said, they pay personal expenses out of the business. And honestly, it's okay to pay personal expenses out of the business as long as they're reported as shareholder distributions or dividends or whatever it is. But it's wrong for a lot of reasons to pay personal expenses out of business and deduct them as business expenses.
Right.
We see that very often. That's a lot of how we spend our analysis time. We get bank statements and credit cards for the business and actually do our own accounting to try and identify that type of expense. Meals are a big area, sometimes clothing, sometimes payment for kids' expenses, tuition,
Yes.
maybe even sponsorship of sporting teams, travel expenses. I had one party who paid for a wedding out of a business, and we happened to spot it as we were looking through the expenses because it was just not related to the type of business it was. And then we were able to go on to that person's Facebook page and found some photos of their child being married at that particular venue.
Oh my goodness. Yeah, social media comes to get you again.
Yes, it does. But you mentioned cars and phones. Sometimes those are absolutely legitimate and
Sure.
sometimes they're not. If you've got somebody who goes into the office every day, just commutes, they not traveling around to sites, and they've got a Lamborghini car, then that's not a business expense. If they've got a yacht, and we've seen that too, that's not usually a legitimate business expense. It may be for a certain type of business, but you have to fit the facts with the motivation.
What about country club memberships? I'm sure you've seen a few country club memberships in your day. Yeah,
and again, if it's used for business purposes to entertain clients, maybe a portion of it's legitimate, maybe not all of it. And there are certain types of businesses where you do have to entertain clients all the time, and golfing is a big way to do that.
Yeah. I think it's a matter of degree. It's a matter of degree, isn't it? I mean, I think your kid's wedding at the country club maybe is not a legitimate business expense, but taking some prospects out for golf. Yeah.
Tickets to sporting events. Now the IRS has clamped down on those kinds of expenditures over the last number of years, but we have tickets that we buy to the Braves season tickets every year. We legitimately use them for our clients, but they're not deductible. But we do see those in other businesses where people are buying football tickets, baseball tickets, concert tickets, all sorts of entertainment that is really not directly related to the business.
Right. Laurie, I read somewhere, and I like your take on it, that some people aren't afraid about fraudulently hiding income in divorce, and the potential threat of being reported to the IRS because family law court judges rarely report tax fraud to the IRS. Would you think, is that a reasonable, is that accurate?
I do think it's somewhat accurate. People underreport their income all the time, whether or not they're in divorce, they're motivated to not report it to the IRS. And very often they are not too worried about it in a divorce situation, but we have had cases where it's pretty egregious and they don't want it on the public record. So we managed to get cases settled in mediation or maybe in arbitration where all of the tax fraud is not available to somebody who's just looking.
Right. So, Laurie, you're based in Atlanta, but I assume you do work with clients across the country?
We do. We can work in any state. We've worked in a good number of states, a lot in the Southeast, some in the Northeast, Midwest, California, wherever. The laws are different in every state because divorce law is state-based, it's not federal. So anytime we go into a new state that we haven't been in before, we read the case law, we talk to the attorney, find out how separate and marital assets are defined, when assets may stop being marital assets. Some states say retirement assets are divided at the date of separation, but other assets at the date of divorce. And we have to know all of that in order to do accurate work, but we do it all the time.
Okay,
So
great.
simple answer to the question is yes, we can work anywhere.
So, we're coming to the end of our time here. I just wonder, how would you advise divorcing clients when hiring someone such as yourself? And what advice would you give to somebody who's maybe concerned that their spouse is hiding assets and they're approaching you?
Well, the first thing is make sure you've got an attorney. Even if the attorney isn't spending a lot of time on the case right now, we always want to be hired by the attorney. So our attorney is protected as attorney work product and it's privileged, which gives us control over when it's disclosed to the other side. Second thing is we always want financial experts to be brought in early in the case. If I'm brought in at the very beginning, I can help craft discovery that goes to the other side based on the circumstances of this family. And if people wait until mediation has failed or they're on the verge of a trial, we may not be able to access the information we need, and we may not have the time to do the work that we need to do.
Yeah, no, good advice. For any of our listeners interested in engaging your services, how can they find you?
Well, we're on the web, www.iagforensics.com. And my direct dial number is 770-635-1593.
Terrific, Laurie. Well, thank you very much. It's a very interesting topic, and I'm sure you've given our listeners a lot to think about. Thanks very much for your time.
Thank you for having me.
Thanks so much for tuning in to this episode of the Gray Divorce Podcast. To learn more or get in contact with your host, you can visit Andrew's website at transcendretirement.net. Also, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. That helps others find the show, and we'd greatly appreciate it. Thanks again for listening, and we'll catch you in the next episode.
Information provided is educational only and should not be construed as legal or tax advice. Each situation is unique and should be discussed with your tax or legal advisor prior to implementation. Andrew Hatherley is not an attorney and does not provide legal advice. Information provided is financial in nature. Advisory services offered through Hatherley Capital Management, LLC. Divorce financial analysis services offered through Wiser Divorce Solutions, an affiliated company.